All right. So, when you open up your brokerage account or you look at, the market headlines and all you see is red,
Yeah.
it can be a little unsettling, right? I mean, it's
No,
easy to kind of get caught up in like, uh, oh, what's happening? Should I be worried? What should I do?
right.
So, we're here today. We've got some sources, some recent market analysis, and we want to try to cut through the noise a little bit for you,
Absolutely.
and kind of see if we can pinpoint any potentially undervalued stocks that might be emerging from this correction that we're in.
Yeah.
That may just have a strong chance of a rebound.
Right.
And of course, full disclaimer, this is all based on publicly available data. This is not financial advice.
Of course not.
But we're really trying to extract some key insights here for you that could be valuable.
Absolutely.
So just to kind of lay the groundwork, we've got an analyses here of broader market trends.
Yeah.
As well as some evaluations of specific companies. And the mission of this deep dive is really to understand if this current kind of dip in the market could actually present some interesting opportunities.
Right.
The S&P 500 has indeed entered correction territory.
That's right.
And we've seen some pretty, significant drops, particularly in growth-oriented stocks. I mean, some really well-known companies have fallen by as much as 27% in the last month alone.
Big numbers.
Huge, yeah. So, this might seem concerning, but, it also sets the stage for what we're really here to explore today.
Yeah.
And that's really the potential opportunities that might be kind of emerging in this environment.
Exactly. Because, historically,
Right.
I think this is interesting for you to keep in mind. There's a French saying, baisses ne durent pas éternellement.
Oh, I like that.
Downturns don't last forever.
Okay.
And the data really seems to support this.
Yeah.
So, going all the way back to 1929, we've actually seen, a significant number of market corrections. 56 of them to be exact.
Okay.
Defined as drops of over 10%.
Okay. So those are not insignificant drops.
Not insignificant at all.
Yeah.
And what's, I think, crucial for you to understand is what happened after those drops.
Right.
So of those 56 corrections, 22 of them did turn into more severe bear markets.
Okay.
Meaning, a decline of over 20%.
Yeah.
However, the key takeaway here, I think, for you is that the majority of them, 34.
Right. Did not.
Okay, so more often than not, they don't turn into the scarier, bear market.
That's right.
Yeah.
And when we look specifically at corrections, since 1946,
Okay.
the average one has lasted about 4 months before the market starts to recover.
4 months. Okay, so let's unpack this for you a little bit as a listener. So if we're currently in a correction, history suggests that, we might be looking at a roughly 90-day to 120-day window, give or take.
Where prices could be lower. And this potentially creates this time frame where, if you identify some companies that you believe are fundamentally sound,
right,
you might only need to have, roughly a 3 to 4 month investment horizon to potentially see a rebound.
Yeah, that's a historical pattern.
Right.
But, of course, it's really important for you to remember that the market is inherently unpredictable.
Right.
And we are seeing significant volatility right now.
Yeah, absolutely.
No one can guarantee future outcomes.
Right.
But I think by looking at the data and carefully analyzing individual companies, we can try to identify those stocks that appear to be, significantly discounted relative to their potential.
Right. And that brings us to what I know you're interested in hearing about, which is, where might these potential opportunities lie?
Right.
So the source material that you shared outlines some specific screening criteria that were used to kind of pinpoint these potential buys. Can you walk us through, how they approach this?
Yeah, definitely. So the analysis focused on companies that had, experienced a significant price decline.
Okay.
Specifically more than 20% in the last month.
Wow, that is significant.
Yeah. It also looks for growth-oriented stocks that showed, strong potential for a rapid recovery.
Okay.
And importantly, I think for you to understand their reasoning,
Yeah.
they use the price-to-sales ratio,
Okay.
or PS ratio, as a key metric to assess whether a stock might be undervalued.
Okay, so we're talking about identifying stocks that have taken a significant hit recently,
Yeah.
but still have good prospects for growth in the future.
Right.
And importantly, are trading at a lower valuation based on their sales.
That's right.
Okay, that makes sense. And based on these criteria, one company that really stood out was Aera Labs, ticker symbol ALB.
Yes.
What did the analysis reveal about them?
So Aera Labs has indeed seen a substantial drop, around 18% in the last month. What's, I think, particularly noteworthy for you as someone following this is their strategic position in the market.
Okay.
So they're a key player in providing connectivity and networking solutions.
Okay.
Which, as many are aware, is a sector absolutely vital for the ongoing advancement of artificial intelligence.
Yeah.
I mean, think of them as providing some of the, foundational infrastructure for AI development.
Okay. So they're in a crucial part of a rapidly growing industry.
Exactly.
And it wasn't just their market position that was interesting.
Right.
There was a pretty, significant investment made by a major player that I think you should know about.
Absolutely.
Yeah.
So Amazon has made a notable investment in Aera Labs.
Right.
They hold over 277,000 shares.
Wow.
Estimated to be worth around $25 million.
Okay.
So that level of backing, from a technology giant
Right.
can certainly be seen as a significant vote of confidence.
Yeah, absolutely. And what about their growth projections? I mean, as a listener, this is a key part of understanding, the potential for a rebound.
Absolutely.
Yeah.
So Aera Labs is projecting strong sales growth,
Right.
a remarkable 70% this year,
Wow.
and another 31% in the following year.
Okay, so those are really, strong numbers.
Yeah, and when you combine that with, the significant reduction in their valuation,
Yeah.
their price to sales ratio has fallen from a high of 68 times sales in December.
Okay.
Down to just 23 times sales currently.
Wow.
So that's a valuation decrease of about 61%.
Huge.
Yeah, and I think the key takeaway here for you is that a significantly lower PS than a company's historical average,
Yeah.
especially when coupled with strong growth prospects,
Right.
can signal that, the market has overreacted to the downturn and created a potential buying opportunity.
Okay.
So, if the market sentiment recovers a company with this kind of growth potential,
Right.
trading at a much lower multiple, could indeed see a very strong recovery.
Okay, so that paints a pretty compelling picture for Aera Labs.
Yeah.
Another company that surfaced in the analysis was Trade Desk ticker TTD, which operates in the digital advertising sector.
Right.
What's the story there?
So Trade Desk has also experienced a significant downturn,
Okay.
even more pronounced than Aera Labs.
Yeah.
They're down approximately 30% in the last month.
Wow.
And a substantial 52% year to date.
So a rough year for them.
Yeah. Now, while those figures might seem alarming, as an investor,
Right.
I think it's important to look at their underlying business performance.
Right.
So even with revised, somewhat more conservative forecasts,
Okay.
they still achieved a 22% revenue growth in their most recent quarter.
So they're still growing, just maybe not at the exceptionally rapid pace that some analysts had anticipated?
That's right.
Okay, and how does their current valuation compare to their historical levels?
Yeah. This is, I think, where it gets really interesting for you. So their current price-to-sales ratio is around 11 times.
Okay.
Now, if we connect this to the bigger picture for you,
Yeah.
their annual average PS ratio has been significantly higher historically.
Yeah.
In fact, the current PS is about 54% below their historical average.
Wow.
So this suggests that, the market correction has significantly discounted the stock, potentially creating a strong revaluation opportunity.
Okay.
Especially when you consider that, as this source points out, the digital advertising sector continues to experience strong growth overall.
Makes sense. So a leading company in a still growing industry, a significant drop in price.
Yeah.
And a valuation that's notably lower than its historical norm.
That's right.
Okay. The screening process also highlighted one more company for us, MongoDB, ticker MDB.
Yes.
What can you tell us about them?
So MongoDB, a well-known database platform, has also felt the impact of the market correction.
Yeah.
Its stock price declining by around 33%.
Okay.
What's noteworthy, I think, for you is their current price-to-sales ratio, which is relatively low at 6.9 times.
Okay.
Historically, MongoDB has often traded at considerably higher PS multiples.
Okay, so similar to the others that we've discussed, a significant price drop leading to a lower valuation compared to its past.
That's right.
And what about their future prospects?
So the source material emphasizes a very substantial total addressable market for MongoDB,
Okay.
projected to reach an impressive $153 billion by the year 2028.
Wow.
This indicates very strong potential for future demand and growth
Mm-hmm.
for their database services,
Right.
which I think is something, to keep in mind.
So we've examined a few companies now that seem to fit the criteria.
Right.
Significant recent price declines potential for future recovery and currently trading at what appear to be discounted valuations.
Uh-huh.
But it's important to remember, as the analysis pointed out, that not every stock that experiences a drop
Right.
is automatically a good investment.
Absolutely.
Right.
It begs the question, how do you differentiate between a genuine opportunity and a stock that might still be overvalued,
Right.
even after a significant correction?
And they used Palantir ticker PLTR
That's right.
as a good example to illustrate this kind of cautionary point.
Exactly.
Palantir, a company that's gotten a lot of attention.
Yeah.
They've also seen a significant price decline recently, haven't they?
They have, yes. Palantir has fallen by approximately 29%.
Okay.
However, despite this correction,
Yeah.
the analysis highlights that it still trades at a very high premium, around 92%,
Wow.
when compared to its historical valuation.
So still a considerable premium even after the drop.
Yes.
And what does their price to sales ratio look like in this context?
So even after the price decline, Palantir's current PS ratio is around 73 times.
Okay.
Now, if we compare that to, its average PS ratio of 38 times,
Yeah.
it becomes clear that even with the recent drop, the stock might still be considered expensive
Right.
relative to its historical trading level.
So the takeaway here is you can't just buy the dips. Exactly.
Even after a significant fall, a stock can still be overvalued.
Right.
And your potential for gains might be limited, and you could still face further downside.
Yeah. This really underscores the importance of, not just looking at how much a stock has fallen,
Right.
but also, its valuation in a broader context.
That's a really critical point.
Yeah.
So bringing it all together, what's the overall takeaway from this deep dive into, these market corrections and these potential opportunities?
So I think the overarching insight here is that, market corrections,
Yeah.
while they can feel unsettling, have historically been temporary events.
Right.
And, within these downturns can exist genuine opportunities,
Yeah.
but only if you're prepared to do the research and
Yeah.
act decisively.
Yeah.
The analysis we discussed suggests that companies like Aera Labs, Trade Desk, MongoDB
Mm-hmm.
currently show what appear to be attractive valuation,
Yeah.
combined with, strong growth potential.
Right. Positioning them as, potential candidates for a significant rebound.
Right.
If and when the market recovers.
But it's equally important to exercise caution.
Of course.
And avoid those companies that, despite a price drop,
Yeah.
might still be trading at, kind of inflated valuations.
Right, as the example of Palantir illustrated.
Yeah, exactly. So to kind of summarize, market corrections can indeed present a window to potentially acquire strong companies at a discount.
That's right.
But as always, careful and informed analysis is crucial to differentiate the true opportunities from those that might still carry a significant risk.
Absolutely. It's about, looking beyond the immediate headlines and the percentage drops.
Right.
And really understanding the underlying fundamentals and valuations of the companies.
Well, this has been a really insightful look, I think, into navigating these market corrections.
Yeah.
We hope that this deep dive has, provided some clarity and maybe even identified some areas for you to, conduct some further research. As you consider, the information we've discussed today in the context of your own financial situation and your investment goals.
Yeah.
Here's a final thought for you to ponder. Given the historical data on market rebounds and the specific examples that we've discussed, what specific criteria would you prioritize when evaluating potential investment opportunities during a market correction?
It's a great question.
It's something to think about as you continue to navigate the markets.
For sure.
Thanks for joining us.
Thanks for having me.